Opendoor has just closed the Wednesday session at $6.94, down a modest 0.7%. But once again, the closing print does not tell the full story of what actually happened today. If anything, the chart is masking the real dynamic happening underneath the surface. And what we're seeing underneath is not weakness. It's not breakdown. It's not capitulation. It's something much more interesting, something that often appears right before a meaningful move. Today was another day of quiet strength, steady accumulation, and a kind of coiling pattern that traders who watch tape closely will recognize immediately. Let's talk about what actually happened inside the session. For most of the day, Opendoor traded confidently above $7. It held that level multiple times. When the stock dipped, buyers showed up. When the market showed moments of strength, Opendoor responded positively and quickly. That is exactly what a healthy high beta stock should do. It should respond to green inflows and remain steady when the environment turns uncertain. And today, that's exactly how Opendoor behaved. The final hour, yet again, was the problem. The indices rolled over. Futures weakened. ETF flows shifted defensive. And when those macro flows kick in, stocks with higher volatility profiles are always the first to get swept into the red. That's what happened yesterday, and it's exactly what happened again today. But here's the critical thing. The stock didn't collapse. It didn't plunge a dollar. It didn't lose its key support zones. It simply drifted lower with the broader market. This is now 3 straight sessions where the close has been misleading. 3 straight sessions where the stock spent most of the day acting stronger than the market. 3 straight sessions where accumulation has shown up repeatedly around key levels. And 3 straight sessions where the only meaningful weakness has come in the final hour as the macro picture deteriorated. If you strip away those macro headwinds, the shape of Opendoor's intraday trading looks quietly bullish. And that brings me to the heart of today's analysis. Opendoor is coiling. Coiling is that pattern where the stock begins tightening its range. Highs get a little lower. Lows get a little higher. Volume compresses. Volatility narrows. And underneath it all, you start seeing that price becomes less reactive to bad news and more responsive to any hint of strength. This is the kind of pattern you see before a breakout or a breakdown. And based on the behavior of the last week, the underlying tilt here looks more like a breakout setup than a breakdown setup. Why? Because when a stock is weak, you see panic selling. You see broken support levels. You see bids disappear. You see sudden flushes. You see traders unloading shares on every pop. None of that is happening here. Instead, you're seeing steady defense around $6.80 to $7. You're seeing buyers stepping in with increasing confidence. You're seeing the stock refuse to crack even on weak market closes. And you're seeing that all the negative information is already priced in, while the positive information hasn't been priced in at all. Let's talk about that positive information for a second. Opendoor has a lot happening behind the scenes right now. The new AI-driven, self-serve home assessment tool that Kaz highlighted recently, that's a major operational improvement. It reduces friction, increases speed, improves accuracy, and aligns perfectly with Opendoor's long-term strategy of making home transactions instant, simple, and data-driven. That's not priced in. The efficiency gains from the recent company-wide hackathon? Also not priced in. Kaz literally shared that one hackday project alone eliminated 12,000 hours of manual operational work annually. That is massive leverage. That translates directly into lower operating costs and better margins. The new growth scoring system for targeting? Kaz said the results would take a couple of months to show up, but that it was genuinely quite good. And if a system like that improves customer targeting even slightly, it improves acquisition funnels, improves pricing models, and improves conversion. Also not priced in. The acquisitions tracking near the high end of internal expectations? That is one of the strongest signals of momentum you can get in a seasonally difficult period. Also not priced in. So what we have here is a stock coiling at a time when internal progress is accelerating. And that combination is powerful. Because when a stock coils during a period of internal stagnation, it can break down. But when a stock coils during a period of internal acceleration, when fundamentals are improving beneath the surface, that's often the precursor to a breakout. Now add the warrant dynamic on top of this. The K, A, and Z warrants have now appeared in most brokerage accounts. Some traders are hedging. Some are rebalancing. Some are taking short-term profits on common while holding the warrants for longer-term upside. Some are rotating exposure depending on their risk preferences. All of this activity is creating a very tight volatility range. This is classic volatility compression. And volatility compression almost always resolves with a larger move. Today's video angle frames all of this into one simple message. Opendoor is quietly coiling. There is a calm before the storm, a tightening of the range, a strengthening of support, and a sense that accumulation is happening right beneath the surface. The quiet days are often the ones where the market reveals its real intentions. And today was a quiet day. No big headlines. No dramatic moves. Just steady, controlled trading followed by late-day macro noise. This is exactly the type of setup that rewards investors who understand behavior before price. So what does all of this mean going into the rest of the week? It means watch the $7 level. Watch how the stock behaves in the first hour of trading. Watch where the volume increases if the market flips green. Watch how quickly the stock responds to positive macro signals. And watch where the quiet strength continues, because if it does, then this coil is almost certainly pointing toward an upside resolution. Today wasn't exciting. It wasn't dramatic. It wasn't chaotic. But it was revealing. And sometimes, the subtle days tell you the most about where a stock is heading. Opendoor is stabilizing. It's compressing. It's coiling. And it's doing all of that at a moment when internal fundamentals are quietly improving. Silent accumulation leads to loud moves. And Opendoor may be closer to a loud move than people realize.